The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope everyone out there listening is having a profitable start to the trading week. My name is Mark Longo from theoptionsinsider.com, as well as many of the shows here on the old Options Insider Radio Network. And I am joined here by, they're all repeat customers, it's just none of them have been around in a while, so except for you, Uncle Mike. Maybe I guess I will start with you then. Filling in for the man from the mountains is his boon companion, good old Auntie/Uncle Mike Kavanaugh from Know Your Options Inc. Auntie, Uncle, Grandpa Mike, how are you doing today, sir?
We are good. Holding down the fort, pretty rocky morning. Nice little afternoon rally in the overall stock market.
Yeah, things definitely turned a wee bit towards the end of the day. Not enough to get us into the green, but enough to stem the bleeding, as it were. We are also joined in the Options Express hot seat this episode by good old Big Rob Kurzatkoski from Options Express. Rob, it's been a while. Welcome back to the show.
Thanks for having me back on, and just taking a look at Netflix. Got that email before the start of trading today from the ex-CEO or the CEO. Maybe that's a little Freudian slip there with the ex-CEO part. So
the stock's down 50%. It's not looking good for him.
Yeah. So yeah, I kind of walked in expecting it to be a fairly busy day.
Yeah, the Widowmaker was certainly lighting up the tape today, and we will get to that in the trading block. In fact, you picked a good show to come back on, Rob, because I know you like the tech names and pontificating on that, so I might think you even planned it this way. And last but not least, we have yet another replacement filling in for us yet again, good old Andrew Giovinazzi from Acumen. Andrew, welcome back to the program. You're becoming a regular, sir.
Thank you. I have so much fun that Mark keeps saying, "Hey, Andrew, could you do the show for me?" And I said, absolutely.
So with the team assembled, we're going to dive right into the trading block.
The Trading Block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we discuss what's been going on in the markets today, what's been lighting up the tape, what's been moving the broad indices, and as Uncle/Grandpa/Auntie Mike alluded to in the banter block, there was an interesting yo-yo day on the street again today. We started off down relatively heavily. The S&P was down over 20 handles at one point this morning off of some bad housing numbers, and that just seemed to sour the market overall. Of course, there was some lackluster news coming out of Greece that Greece's lenders were telling them to essentially shape up or they're going to be out of money. in a few weeks. They need to cut down on the public sector and a variety of other things out there. So kind of a combination of negative factors leaning into the market today. But towards the end of the day, we saw a relatively sizable rebound. Not enough to close in the green, but enough to erase about half of the downturn. S&P closed down about 12 handles to 1204. The Dow closed down 108 to 11401. NASDAQ closed down about 9.5 to 2612. And the good old VIX cash moving to the upside closed at 32.73, up 1.75 handles. And of course, as we also alluded to in the old banter block today, one of the big movers on the street, one of the big, I guess you can call it, say, newsmakers on the street today was the old Widowmaker, down yet again. Netflix, of course, we are talking about. Closed today at 143.75, down nearly 12 handles or 7.5%. This stock is now off over 50% from when they announced that price change back in July. And the CEO doing a bit of a mea culpa today, saying, hey, maybe we shouldn't have come out and said pretty much we're raising our prices, deal with it. Probably should have handled it a little bit better, because they've now lost over 1 million subscribers since that announcement, and which was far more than they predicted. And their stock, as we mentioned, off over 50%. And I'd imagine the latter of those two is what's really catching that CEO's eyes. But yeah, a lot of action in Netflix. So Rob, I'd imagine people were lighting up the tape today at OX and Netflix.
Actually, surprisingly, Netflix is quiet today. I think it's fool me once, shame on me, fool me twice, shame on you, type of deal. Trying to get my the catchphrases correct there, but it certainly seems that with this move, whenever we've seen previous companies, whether it's AT&T or Motorola, split their divisions like this, it looks like I think the realization is finally starting to set in at Netflix that maybe it's time to sell, just split off and sell one of the units. If they want to keep on being the internet, DVD service, hold on to that and try to spin off the streaming portion of it to an Amazon or somebody else, or you typically don't see healthy companies just deciding to split themselves into various divisions.
If I had to guess, though, I'd have to imagine they're going to hold on to the streaming portion. That's where the future obviously is. The DVD portion was their prior business model. It's growing a bit antiquated, but there still is a market for that. But of course, the costs of moving a truck full of DVDs across the country are getting up there. So they needed to raise their prices to reflect that, and that apparently didn't sit well with a lot of their customers who've been used to getting all-you-can-eat DVDs delivered to their mailbox for whatever it was, $8, $10, $12 a month. It was a relative steal, I suppose, by comparison.
Oh, yeah, absolutely. And Blockbuster is now going to that model where they have little kiosks a la Redbox. So they may try to package that and split it off. Or if the price is right, if Amazon is able to get a dealer, I don't think Hulu is in a financial position to make that type of deal. If the price is right, they may be willing to sell the streaming part off. I mean, you saw the speaking of split off companies, I mean, you saw the Motorola Mobility split off just catch that ridiculous premium when Google essentially pulled a Jim Hendry and bid against itself.
Yeah. Don't remind me about that one. That one still stings a little bit. But yeah, that was it. Yeah, I mean, I suppose that they could potentially be looking at divesting some of this action. Andrew and Mike, you guys watching Netflix at all today?
Yeah, I'm just this is Andrew. Just surprised on why does a company that was so successful up to a month ago that had, crazy PE, crazy growth, just stop. They go, this isn't working anymore. We're just going to stop and we're going to pull a plug in two different directions. I think it's right about just there's an underlying problem that the market wasn't catching up till then, and now they're starting to look at it. Now you look at it and go, where does it go? It's still a pretty richly priced stock, even down 50%. It's probably fairly priced if it doesn't really have much of a growing business anymore, down another 50%. Why do we give it a multiple at all now if everything they're doing is becoming undone? I think that's my next question.
Are you possibly implying that there might have been a bit of froth, perhaps a bit of bubble-esque behavior around Netflix up until a few months ago? Could you possibly be implying that, sir?
I might have got a little bit frothy there at 80 times or 90 times earnings for a DVD resale business over by mail, but what the heck? They had a lot of potential in, the streaming business, but all of a sudden they're advantage. And another thing too is, where do you go now to get DVDs? I mean, they put Blockbuster kind of out of business. I mean, there's like one DVD store in our town. There used to be 5. There's still a market for the DVD business.
I think Redbox owns that these days.
Yeah, Redbox lines out the corner this weekend.
Really?
Oh, unbelievable.
I can never get anything out of a Redbox. It's like they've got all this stuff in there. They say it's there, and then all I have is, the Chipmunks' Last Adventure or something by the time I actually can pull something out of the darn Redbox.
Hey, my little guy loves the Chipmunks these days, unfortunately. But Rob,
you got to see it 80 times.
Yeah, of course, or at least. Rob, you must have some mixed feelings about Redbox, since a lot of that Redbox money went to fund one of your new competitors over there.
Yeah, I mean, Redbox. Personally, a lot of people that I know have actually they figured out, it costs about $8. Was $8 for the DVD service. They probably don't rent eight DVDs a month, so they're probably switching over to Redbox nowadays. I mean, it certainly has gotten a lot busier of late, and if you're going to order a Redbox, I do it via like online, because by the time you get there, it's pretty bad. So I usually try to do it during the workday.
Getting your movies during the workday. Of course, Coinstar, the company that owns Redbox, has been on a bit of a upward swing, not surprisingly, since late July, early August. I wonder what happened around that same time frame. I couldn't possibly imagine. The same time that Netflix was taking a turn to the downside of 50%, we've seen Coinstar rally from the high 30s all the way up to pushing the 50 handle, or close to it today, closed at 47.40. Coinstar's subsidiary Redbox lighting up the tape, it seems like, these days. And I agree with you, Uncle Mike. I went past a Redbox this weekend, and there was a line pretty much 4 or 5 people deep at any given time. It's just people want their $1 movies. It's a good little model, I guess, to be in. Quick, easy, convenient, no hassles, no increasing fees coming down the road for you.
Yeah, I think anything that has the word "it only costs $1" tied to it right now is where you're seeing the most action. Whether it's Redbox, the McDonald's dollar menu, Dollar General stores.
Don't even get me started on Dollar Generals. Your counterpart there, Uncle Mike, he's a huge proponent of the Dollar Generals. And I hear some others in your office are now coming to the dark side of the Dollar General camp.
Yeah, we got Dr. George comes in here every day with $1 in a frame, and he just flashes it to us. This is where the money is.
So that's his new thing. You guys are picking up upside verticals in Dollar General?
We're looking at it. Whether we're selling the puts or just outright buying the stock and doing some protective collaring, it's been on our radar. It's funny, but look at what McDonald's has done over the past 2 or 3 years. I think it's up 60%, and I think you could tie a lot of that to the dollar menu.
Yeah, it doesn't hurt to be able to get nuggets for the little guy for $1 or whatever the case may be. But yeah, speaking of collaring and adjusting, we're seeing some downturns in the old commodity land today. So let's dive into our commodity rundown, and you could tell us what you guys were doing in the precious metals KYO portfolio, and then Rob, you can follow up with an overview of some of the other commodities you were watching today. So go ahead, Auntie/Grandpa Mike.
Yeah, I think when you get days like today where, I think most people, I don't know, I can't speak for most people, I guess, but, we've always had that concept that some things go up and there's counterbalances in the portfolio, that when some things are going up, some things are going down, and your counterbalance when things go down is usually, either gold or treasuries in some capacity. But over the course of the last 3 years, down is a direction of a portfolio on a day like today. Gold was down. It should have been up with all the news in Europe. So we didn't make any adjustments to our portfolio today. We're pretty locked in until November here. We've got a collar on our gold position in the GLD. We're long the underlying, and we're long the November 170 puts, short the 185 calls. So we've got a nice little hedge in place. But yeah, I mean, when the market has one direction, I mean, everything, commodities were down, equities were down, the direction was down. So we're still positioned that gold above 170 is where we want to own it. If it gets below 170, we've got a protective put in place.
And I had an interesting conversation earlier this week, or actually this would be last week now, when I was in New York for the FIA OIC conference. I had an interesting conversation with someone there about the increasing correlation across asset classes, and how if you look at things that were traditionally viewed as hedges, like the commodities and whatnot, they are increasingly correlated to the equities now. And if you're looking for safe harbors and places to go, it's becoming increasingly difficult. And unless you're versed in options and know what you're doing, know how to use an option to hedge your downside, you're running out of luck, which I think is why so many of these financial advisors are starting to find religion and come over to the quote-unquote dark side of options, as it were.
Yeah, I wish I could have been a fly on the wall in that conversation.
Yeah, you probably would have liked it. I was thinking about you as I was having the conversation, actually, as I am wont to do on a regular basis, Auntie Mike. And Rob,
I think every time the VIX goes to 30, you hear that though too, right? All of a sudden, everything gets volatile, and any bad news, everything goes down. So
yeah, that's true. It is a recurring refrain, as it were. But this
the last 3 years, yes.
But this is you're hearing it with increasing, I guess you can call it, alarm across multiple asset classes now. And the people who are relatively old school, and their idea of diversification was own 12 stocks, maybe have some overseas stocks in their portfolio, maybe a little bit of exposure to metals or whatnot. That really isn't working in terms of diversification anymore. And speaking of commodities, we saw oil take it on the chin a little bit today too. So Rob, why don't you run us down the rest of the commodity movers and shakers that you were watching today?
Well, I was looking at the precious metals. They've kind of been fixated on those of late. Crude oil.
You and about everybody else, it seems like, these days.
Yeah, I mean, the other commodities have been really, really choppy, kind of following the energies and metals. Oil really took it on the chin today because it once again nobody knows what's going to happen in Europe. I mean, everybody kind of knows. I think the best phrase I've heard about it recently has been, well, the EU is basically just kicking the can down the road. It's inevitable that Greece is going to go bankrupt. Very likely that they're either going to be, forcibly or by their own accord, they're going to opt out of the EU, and that's a very scary proposition, because that's kind of been the mantra is we have to stay united even in these trying times. And Sarkozy and Merkel have really been focused on keeping everything together, but you're eventually going to get to a point where nobody is going to finance you, and either you have to kind of chop off the wounded limb and amputate the wounded limb, or the whole body's going to get infected. And with Greece, I mean, some of the other countries you can see them turning around because they have more order. Greece has always been extremely volatile, to say the least. The country, they've go through change of governments pretty often. It's just difficult to see the EU, down the road, not just finally throwing their hands up and saying, well, let the chips fall where they may. And I think that some traders are also using the oil as a macro hedge. Basically, if they're deciding to kind of tiptoe back into the equity market, they'll sell crude oil futures against it, being that it's a macro hedge. If you're long a bunch of stocks in different countries and different sectors, there's no better commodity that really tracks global economic growth than crude oil. And I think that some of that's been in play recently, and I think that's the reason why crude really hasn't been able to regain any traction of late. Gold and SLV, I'll kind of hit on these a little bit later in the Express block, but gold tends to have, in times of panic, it has a very strong inverse correlation with equity markets. When the market seems to either be coasting along or is priced in that panic, and there's no new panic news out there to cause the equity markets to sell off, there's a very strong correlation between gold and equity markets, because basically traders are now focused on looking at it from a growth/inflation standpoint versus a head for higher ground asset.
Yes, exactly. And I think with that, we will close out the old trading block and roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is, of course, the portion of the show where we discuss the interesting and or the unusual options activity that is lighting up the tape today. And we're going to kick things off. I threw this one in here for good old Uncle Mike because I thought he was going to be on the show today. And I know he likes these natural gas names. So we have some activity in the natural gas company Range Resources Corporation, ticker symbol RRC. And they closed today at $65.83, up about $2.40, or nearly 4% on the day. This is the name that does about 3,500 contracts a day. They did 24,000 today, 21,000 of that in calls. So that should tell you where the sentiment was leaning today in good old RRC. And what we saw was news coming out that there's a suitor for this name, specifically a non-U.S. suitor for RRC, and the news of that drove the stock up, drove a lot of activity in the near-term upside calls. This is the name, like I said, does about 3,500 contracts a day. We saw nearly 6,000 of the OX70 calls going up today, and about 6,000 again of the OX75s going up as well. That's on previous open interest of about 1,800 of the OX70s and about 80 of the OX75s. So this is all opening paper here. The bulk of these are buys coming in on these strikes. And like we said, just a lot of people coming in and speccing to the near-term upside, given the rumors floating around in RRC that they are going to be acquired sometime soon. Didn't see much else in terms of size, put selling, or anything along those lines. Pretty much about 12,000 of the 20,000 contracts or so was concentrated in those two strikes. About 2,000 of the OX65s going up as well. So someone playing in the at-the-money is a wee bit as well. But not too many put sellers, which is not uncommon when you see a name like this. Everyone wants to spec on a pop to the upside and ride that all the way up. And so they pick up some near-term upside. Uncle Mike, or I'm sorry, Auntie Mike, do you guys watch this one at all? I know you guys are pretty active in the natural gas arena.
It's not one that's been on our radar. I've watched the stock through the course of the years. It comes on our radar when it gets up to like the 60 area, where it is. I mean, if you look at a 5-year chart of this thing, it's been up there before. It goes down to 20, and it seems to range back up to range, no pun intended, range back up. But if there's talks of a potential suitor for this stock, that would be a potential game changer. And as far as what it's done over history. But this is I think they're located down in Fort Worth. They're an S&P 500 company, big business down in Texas. So if somebody's looking to take them over, there might be an opportunity there.
So yeah, listeners should keep an eye on good old RRC in the next few sessions to see if these rumors are true and if indeed there is a suitor coming in to gobble up RRC. Maybe there are some opportunities for you there. Of course, you missed the move today, and these all this call buying frenzy to the upside has pumped up that upside skew a little bit, but there still are some opportunities for a savvy trader to come in and spec on RRC. And now we're going to move on to the next name here in the odd block, Cypress Semiconductor Corp. Closed today at $17.10, down about 42 cents or 2.5%. And this is the name that does about 4,000 contracts a day. They did 9,000 today, so about double their daily volume. And what caught our attention here today was essentially one trade. We saw one sizable purchase of very near-term at-the-money puts here in Cypress. We saw about 6,500 total of the OX17 puts going up, including a large chunk of them, close to 4,000 around one time for $1.15. And with a current open interest of just about 54 contracts, this is all opening paper. And usually when you see someone putting on a an underlying hedge like this, at least if they're a little more savvy, they usually will roll that out a little bit of a distance and get a little bit more bang for their buck and not pay so much time decay. Right now, this guy is actually just hedging his underlying, and he's just locking the stock in below the 16 strike, which maybe isn't the savviest of trades right now. So this looks like it's probably a near-term spec on the stock. We also saw a little bit of the OX16 puts going up, about 400 of those, probably someone trying to spread off some of these trades, probably market makers and locals trying to spread off these puts that they traded earlier in the day in a name that doesn't do that much volume. So really one big trade lighting it up in today in Cypress. A lot of near-term or at-the-money puts, so watch CY for the next few sessions as well to see if this one indeed comes to pass, and there is a sizable move to the downside. This guy looking for it to drop well below the 16 handle in order for this trade to make some sense. Otherwise, he's paying a lot of vol and a lot of decay for not much in the way of benefit.
You know, it would be fun to do sometime is, you know, when we find a stock like this, is just to earmark it and then put the feelers out to see if, you know, try to find out if we can figure out what this was, whether it's a structured product company that, like you said, you know, is looking to hedge some downside. If it is a spec position, you know, just trying to do a little investigative work over a couple of weeks to figure out, hey, here's what they did. You know, there was back in 2008 when the financials were going crazy, there were the doom trades. Like somebody bought 30,000 puts on the October 30 strike on Bear Stearns, and we found out later that it was just some large debt desks hedging their credit risk with the stock. I think it'd be fun to do that, just to look back.
Yeah, I agree. You know, we have a pretty strong army of unusual activity contributors who work with us on a lot of this stuff. So maybe we'll sick them on some of this. But we find this type of activity, particularly something like this, is illuminating for a couple of reasons. It could be just a naked indication that someone expects the stock to go down, so it's worthwhile noting it just for that, so our listeners can see that and maybe take another look at Cypress and position themselves accordingly. Or it could be illuminating for the fact that, you know, like you say, the size money is not always the smart money, whether they are unwinding a structured product or something else. I mean, if they're unwinding a product, then it could make sense to go straight front month and close it out, and that could certainly be an alternative to this, someone unwinding an OTC trade in the listed products here. But the other alternative is that it's just a fund manager or something else like that with probably more money than option sense. And so when that's the case, that's also informative to our audience to see that the big money is not always the smart money, as we like to say on this show. And they sometimes do things like this where perhaps could have structured this a little bit savvier. It was well intentioned maybe, but probably poorly executed. And then we're going to close out the old odd block with actually something similar to what you're talking about there, Auntie Mike, which is, of course, a review of some activity we discussed on Thursday's show. On Thursday's show, we highlighted someone came into AGP, which is Amerigroup Corp, and picked up essentially what were daily options at that point. They picked up front month SEP contracts with 1 day to go, and size amounts of them too, 3,500 and 700 of these at-the-money calls, essentially specking on an analyst meeting that was going to take place the next day, I guess assuming there's going to be some good news coming out of that meeting, because they were buying 3,500 of the SEP 45s for between 25 and 35 cents, and they also bought about 700 of the SEP 44 calls for about 55 cents. And this was on last Thursday, and on Friday what we saw with the stock was it had quite the range. It opened at 41.22, got up as high as 45.16, and then closed around 44.83. So it had a good range on Friday. Not enough, though, to merit the premium this guy paid for 1 day. He ended up having to dump a bunch of the calls he bought for anywhere between 25 and 35 cents for about 15 cents. We saw about a chunk of 3,500 of them going up for about 15 cents towards the end of the day. So he dropped anywhere between 50 and 70 grand on that part of the trade. And then the 700 lot, that just pretty much went out worthless. Those 55-cent calls, no one closed those out by Friday. So that's another about 40,000 gone. So if this was the same trader, and it looks like it probably was, and he dropped probably around 100 grand on that. It was a little bit of a, not the most sizable trade, but not exactly the most well-executed trade either. He obviously was banking hard on a big announcement coming out of the analyst conference. Didn't work out. He had to run to chase a bid before it went away. He could get some of his money back. Someone also on Friday, though, then turned around and dumped a few thousand of the October 40 puts, including a block of 1,200 for $1.60. So maybe this guy is taking his bullish sentiment and rolling it onto the puts instead and shorting those and trying to double down on a long-term bump to the upside here in AGP. So interesting trading going on. It's fun to go back at some of these that we see that are unusual and kind of a little strange and see how they actually turned out. And this guy had a pretty substantial loser. I took a big flyer and it didn't go his way. And so he scrambled to hit a bid to get out of whatever he could. And then looks like he turned around and sold the puts afterwards, the OC puts, to give himself a little more time and not exactly coming in one day to go. So that was an interesting trade too, in terms of just watching some of these sizable trades there. Or perhaps in this case, this guy was speccing and it didn't work out his way. Always fun to see the winners and the losers and examine them for our audience so they can see that the size money is indeed not always the smart money. And that's going to do it for the odd block. And now we're going to roll right into the Express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the portion of the show where the boys from Options Express take the reins and I sit back and have a nice, tasty beverage. So, Big Rob, what's on the docket for today? I'm guessing Netflix, the Widowmaker, is up there, as well as perhaps some more commodities.
Well, actually, Netflix, as far as what we've seen, order flow at Options Express, has been very quiet of late. I think that you get some of these stocks that have just burned people so many times, where Netflix is such it's burned the long premium buyers, it's burned the premium sellers. So I think at this point people are staying away. A lot of the activity we've really seen lately has been Spider, VIX, GLD, IWM, and XLF. So it seems like within certain industries, things are in such chaotic flux that traders are looking more toward the macro picture, looking at broader based indices. So that's what we've seen. The stocks that we've seen a lot of activity on are the usual names, Bank of America, just because the stock is still relatively cheap, in Apple. A lot of the Netflix paper we saw today happened to be closing paper. People just kind of throwing their hands up and saying, I don't know what's going on with Netflix anymore. So that is kind of interesting to note. I also wanted to talk about the strange gold and S&P relationship that we've seen recently. We saw a really strong negative correlation going into August, where the gold prices were just up and away. Equity prices were starting to fall back at that time, and now we're actually seeing this positive correlation that we've talked about recently. And a lot of this has to do with kind of trader psyche and how people play gold. Now, long term, gold's still a very good complementary asset to have in your portfolio. To say that gold isn't a good hedge, is kind of maybe a stubborn and kind of like older mentality trade where gold wasn't doing anything for a whole heck of a long period of time. So the fundamentals are still out there. It's how traders trade news and how news gets disseminated quickly and priced into the market. Now, should gold have gone to $1,900 from sub 1,600 in that quick of a period of time? Probably not. So we saw a lot of those traders begin to take profits. Now the market is gone away from that panic buying mode because things like Greece, that's already priced in. So unless Greece decides to leave the EU, anything that goes on there is probably going to be secondary to what the equity market and what growth forecasts are looking at least in the near term, until we have that next panic or we have that sharp breakout in the equity market. Now, as long as the market isn't hit with this bombshell and kind of blindsided by this news, we're probably going to see a pretty strong correlation now with equity prices. Now, just because it's going to have a strong correlation and probably in the near term, does it mean that gold is no longer an effective hedge? That's not to say it's not going to be an effective hedge. Long term, these trends, gold and S&P are kind of yin and yang. There are times where crude oil, which is very economically sensitive, will move inversely with the equity market. Over long term, you're going to see gold move along with equity prices for the most part. So that's some food for thought, and some traders that if I get phone calls and sometimes even the reporter call, they just don't know what gold's had this really strong negative correlation for 2 months, and all of a sudden now it's starting to move along with the equity market. They're wondering what the heck's happening. If you're using it as a long-term hedge, if you bought GLD or you're rolling futures, remember that these positive correlation periods do last, sometimes for months, but eventually the market does begin to kind of move in that positive or that negative correlation over a longer period of time. So it is a very good complement to your portfolio. And if the equity markets happen to be turning around and inflation prospects go up because the central banks keep on writing money, it's kind of a double whammy, because what you're using as a hedge is also moving along with you. So it's not always. Sometimes you have to stick it out and really look at gold trends versus the S&P. Ultimately, there is a balance there. It just, like anything else, there are temporary moments where the market is not completely rational.
The market isn't rational. What are you saying, sir? I expect nothing but pure rationality from the markets.
Well, some days the markets are as rational as that Groupon CEO, and
you don't think it makes sense to buy the Wrigley building? All that money they're making?
It's every time I keep on looking at the Netflix CEO and thinking, man, that guy is kind of done some dumb things, and then I look at the Groupon CEO, and the Netflix guy doesn't look so bad.
That Ponzi scheme known as Groupon these days, man. If you're that's just a perfect example of the problems that go along with that VC model that is so rife in the online space these days. Before we go, we hit on the gold and S&P thing already, but we can do it. We can go into more depth if you like.
As far as the gold and S&P, I mean, I'm not going to really go into too much more detail. That may be a strategy block section where we can talk about specific ideas some point down the road. I don't have a whole heck of a lot of notes on this today.
Well, before we go, as Rob was talking, Andrew and I were kibitzing here in the background. He made an interesting point that the trade we talked about earlier in the odd block with AGP, if we assume a certain level of sophistication on the part of the trader, and I don't always like to do that because some of these trades that are coming in, they don't look particularly sophisticated, including this trade. But if we assume,
could be dangerous.
Yes, it could be dangerous. If we assume a certain level of sophistication, this person could have, and if he had good timing, he could have hedged his gamma to the upside around the 45 handle before the stock sold off a little bit. So he could have fared better than perhaps we made out in the odd block if he had perfect gamma hedge timing, which is rare in and of itself. And as Rob was talking, I was kind of parsing through the AGP underlying numbers. It doesn't seem to be there's obviously some underlying activity going around them, but nothing that seems to indicate that this person was sizably hedging his gamma, or at least faring much better. Of course, the stock closed at like 20 cents below the strike anyway, so he didn't get too much of a bang for his buck from hedging up at the 45 handle anyway. So it still didn't work out in his favor, but it might have worked out a little less poorly than,
painfully
than we initially ascribed to him. All right, and that is going to do it for the Express block, and now we're going to roll right into the strategy block.
The strategy block.
And and welcome to the Strategy Block. This is usually the portion of the show where Uncle Mike comes down from the mountains and dispenses tips and pearls of wisdom on options trading and strategies and techniques. And today, since Uncle Mike is not available, he is off deep in the mountains. Andrew has gamely decided to step into the void and carry on his own strategy block. And Andrew, a little birdie, has told me that it is indeed your strategy today is on the tip of what we discussed earlier, which is, of course, the metals / gold frenzy that is consuming everyone these days.
That's right. So I do tend to look at about 800 or 900 stocks at once, generally some of the top trading stocks. So I look at blocks and sectors at once. So here I'm looking at the ETFs. I've noticed the GLL, which is the ProShares Ultra Short name, is now in kind of a strange Andrew indicator. I take 30-day implied volatility and I subtract trailing 60-day historical. That name has actually moved up to number 3 for all actively traded ETFs. Generally, when I see shorter term volatility, get that excited. That's that public paper starting to climb in and starting to grab at contracts like the ultra short gold. I think it's a good that's the contra play, but people are starting to buy it.
So the sell-off is overdone then in gold now that the riffraff is piling into GLL?
It could be, but also at the same, I am a little contraindicator guy, so to me, I think maybe you buy the GLL and maybe write some of the more expensive calls against it, giving you kind of a little tweener or a range in the GLL. It's been kind of a tight for a range lately, sort of like between 14, 17, something like that. It's just something. It's not something to jump in yet, but as it moves up on the volatility list for me, I tend to mark it as something I want to do, but it's starting to get, worthy that actually people are starting to go buy some calls on this contra gold indicator. So as I mentioned, that is in the potential strategy, of course, is anytime people want to buy stuff, the old floor market maker in me wants to immediately go back and sell some to them. In this case, though, I might do some kind of slightly hedge fashion, maybe purchasing some GLL and selling call against it. Even a straight up buy right might not be too bad of an idea with premium at decent levels.
Times are crazy when, the bulk of the people on this show are old floor traders, and we tend to be by nature degenerate premium sellers. And yet over the past few months, we've had more and more recommendations of going long premium. So something is up with the market in general when our mentions on this show start to delve into the long premium space. What was it? Alex from OX, was it a week or two ago, came out and just said buy premium. Just have some units in the old hopper just in case these days, and that's probably not exactly bad advice in this environment. I don't watch this GLL on a regular basis. I'm looking at the stats here right now, and they do about 2,000 contracts a day. So they're not lighting up the tape by any means, but they're liquid enough that you can get some stuff done. I know some of these ETFs, especially these ratio ones, the options are just useless. They're so wide you can't get anything done in them.
Right. That actually, it's not too bad. And again, I wouldn't recommend buy rights on this. It has kind of this. It seems to be kind of stopped out here with gold. Having a hard time breaking to the upside out of 1800. So I feel like, kind of the synthetic, you have some up, you're kind of capped out since it doesn't look like gold's really going to explode anymore, even though we think Greece is going to imminently collapse. So because it's an inverse product, I feel like there's a synthetic stop there. And that's why I look at the synthetic, just the straight buy right there. Not something I normally recommend, going out and writing calls against stock 1-to-1 all over the place. Those has a tendency to explode in your face. But in this case, it might not be a bad idea. So maybe worth a look, especially with some favorable volatility pricing.
Now, this is an ultra short. So what is the ratio on this one? Is it 2x, 3x? Do they specify?
2x plus.
2x plus.
You got to go look at the.
I love that.
What's funny is they say what the ratio is, but is the ratio really what it does?
Well, that's the question with all of these ratio type ETFs.
It's a kind of thing, and that's why looking at the product like that is just some sort of covered fashion. Nothing to do large.
Auntie Mike, you guys play it all in this one?
No, we haven't. We've kind of, like the warning labels they put on packets of cigarettes. We kind of look at those levered inverse 2x, 3x ETFs kind of the same way. The prospectuses on those things are kind of thick, kind of like the warning labels on cigarettes. So we have stayed away.
Yeah, you really got to know how they're structuring these things. Like the 2x plus, that probably says a lot in terms of exactly how they're structuring it. They don't even know exactly what degree of leverage they're putting on. And then Rob, I know a lot of brokers have clamped down on the options on these things lately. What are you looking at in terms of margin requirements if you are going to come out and start writing calls on something like a GLL?
Well, let me take a look at what we have here. Our margin guidelines on the leverage ETFs tend to be a little bit on the conservative side, just because the way that those prospectuses are written, they could be trading pork bellies for all you know. But actually, this one does have a 50% stock margin ratio. So I know that recently FAS, FAZ were kind of bumped up a little bit. I think they're at 60%. You're getting normal Reg T on this. Or actually, the options are bumped up a little bit. So you're getting 20 instead of 20% of the underlying marketplace, you're getting 40%, and the portfolio margin is at 30%. So if you're just buying it, you're getting a good deal. If you're writing options, you do have to put up a little bit more cash, so you're getting a little bit less leverage.
Right, and I wouldn't recommend writing these on a ratio either. The easiest way for me when I look at these products is look at how it trades versus the requisite move in the actual underlying that it's trying to follow. So you start to get a comparison for yourself in real time intraday. So you've got the numbers that they produce, but also, okay, gold's moving this. What did the GLL do this day? And the easiest way is just to do some homework and actually just take a look at it.
There you go, listeners. An interesting recommendation coming from the Mark Sebastian seat today. And it wasn't festooned with any sort of uncomfortable analogies or 80s references. So it was very refreshing in that sense. Our editors will certainly be thankful for that.
But we all lose a little banter for cocktail parties.
Yeah, exactly. All right, and that is going to do it for the strategy block segment. And now we're going to roll into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is the portion of the show where we discuss what's coming up on our collective horizons and what we're watching on the trading screens for the next few sessions. And as we saw this morning, the market took a bit of a beating because of housing data, and we have more housing data coming out tomorrow. The housing starts are coming out tomorrow. Then we have existing home sales on Wednesday. I know we've discussed quite a bit in the past on this program the growing importance of housing as an indicator, and it seems to be trumping other leading indicators that people used to lean on in the past in terms of its relevance to the market and its ability to do what it did today, which is kind of cut the legs out from under the market whenever these numbers are not exactly up to snuff. So a lot of people will be keeping their powder dry ahead of the housing start numbers tomorrow, as well as home sales on Wednesday. Now, Andrew, I know Mark and I have discussed a few times in the past his growing reliance on these housing numbers. Are you fall into that camp as well? Are you starting to lean pretty heavily on housing as a good indicator or a contra-indicator, as the case may be?
To be honest, I still think there's more downside in the housing market. Nothing's really. There's been enough good news to really get people starting to spend again. The best thing is just prices going down. Obviously, you finally got market clearing function. The government stopped doing all this stuff, and eventually these prices will start to stabilize. But it's almost like 6 months are going to go by, and then you're going to have steady numbers going up, and everybody will realize, oh, the housing market's up 5%, and it'll be 6 months later, because I think everything is just going to be very incremental. And that's we've kind of been incrementally going down it was big, now it's slowed down, and we're just going to have to wait till we see that incremental rise the other way. So as far as housing goes, I'm just waiting to start seeing things start to bounce up, kind of in a gentle upward bounce. instead of all this yo-yo that we've been having here at the bottom.
Yeah, it seems like whenever we start having see some bullish signs in the broad market and people are finally starting to put on their rose-colored glasses again, along comes housing to dash some cold water on it and to say, no, things aren't actually rosy. Things are still pretty rough and terrible out there. And if your house is underwater, it's not exactly a boom time for the economy in that sense. So, yeah, housing seems to be able to jar the market pretty substantially. And, of course, we also have good old FOMC on Wednesday. Of course, the relevance of that these days is relatively benign at this point. They've already come out and said they're pretty much going to hold fast for the next 2 to 3 years. So that pretty much limits the weapons they have and the tools they have in their arsenal to really affect any sort of recovery at this point. And, of course, we have jobless claims on Thursday, and that rounds out the old economic calendar. In terms of volatility, I know we've been discussing quite a bit on this program the VIX in its dance to the downside and its tempting dance towards the 30 handle. It has yet to break it. I know a lot of the long-term futures have been predicting an inexorable sell-off in the VIX. We saw a little bit of a change up in that recently with the front-month contracts kind of showing the VIX holding fast before kind of coming off a cliff going into November or so. And we saw with this pop-up today, it looks like all these people who are levering up to the downside in VIX are not going to get their payoff, at least not anytime soon. It's funny. Just over the last month, the number of people I've been talking to who have been leaning short VIX, it's been pretty disproportionate, let's say. So a lot of people out there looking for some sort of move to the downside in VIX. I know, Andrew, you've been watching what's been going on out there in the VIX lately. You think we're going to have any dip to the downside? We're going to hover around here for the time being and then do what the futures say, which is eventually sell off into the mid-20s sometimes towards the end of the year.
I'm again. It all is about Europe. I mean, the whole thing from 30 to 40 and back and forth. The one thing I am looking at, though, is that 30-day implied volatility now on big for lots of names is starting to creep below 60-day. That's one of my just favorite broad market indicators. So they're starting to price volatility lower, which is going to start to weigh on the VIX. So I think at least at some point there feels like there's some gravity pushing on it. And unless we actually get the continued crazy follow through from Greece or whatever the EU is going to do, I think that gravity will keep pushing the number a little lower, but you need those things to subside before it really is going to go down, and as in, selling down. Mostly it's just, I think, bobbing up and down here for the next month or so.
I kind of agree with those sentiments that Andrew just laid down. And, one thing that we've tried to draw an analogy to is investment banks in 08, call them countries now. So if Greece is Bear Stearns and Italy becomes Merrill Lynch and Spain is Wachovia, at some point the guys in the EU are just going to look at each other and say, hey, we're sick of bailing all these people out. And arguably, I think everyone would agree that letting Lehman fail and the repercussions of what happened after Lehman failed, with money markets breaking the buck, different things across the board. I think you look now, how much can Germany, who's anchoring the EU, take? And when you look at the VIX at 35, well, the VIX was at 37 or 35 in that range back in the September of 2008, like right before everything hit the fan. We haven't bailed out Greece. Nobody's bailed out Greece. Everybody keeps saying, yeah, you know what, we're going to bail you out and we'll throw some more money at the problem, but nobody's addressing the problems. They're going to get sick and tired of it. There's a reason the VIX is still at 35. And until this thing pukes out, whatever's keeping the VIX at 35, until it completely pukes out or is solved, I don't want to be short vol here. It scares the crap out of me.
You heard it from Auntie Mike, the technical term, until it all pukes out.
Yep, and scares the crap. Let's get it all in there.
Get it all out of you. It's like you have food poisoning. The market has food poisoning.
Totally.
Yeah, and it's it's starting to get scary when you have Geithner talking about monetizing EU debt, and he's in the U.S. So I think he's either really scared of something big happening, or he's just completely losing his mind. But I mean, that's just crazy talk. I hope that's something that the Treasury, I mean, I really hope that the Treasury really doesn't, or the Fed really doesn't take that opinion all too seriously, because that's just kind of our banks already have exposure to it. We don't need the government our government having exposure to it at this point.
That Treasury job is a pretty high burnout rate, and he's been doing it for a few years now. So maybe he's coming down the other side of that now and starting to feel the burn.
It's consulting on how backroom meetings should be run.
All right, and that is going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. I want to thank all of my stalwart stand-ins for joining me on the show today. And starting off with you, Auntie Mike, what is coming up over at Know Your Options Inc. you want to let our listeners know about?
There's just so much. I can't put my finger on it. We've got a lot of things going on. We've got our 5-year anniversary date to be announced. Get together coming up, hopefully mid-October, but I'll keep everybody informed of that. That's about it right now. Like, we've got a lot going on. I'm sure I should write some of this stuff down as far as we do weekly webinars. We do one-on-one webinars. We're always trying to bring people into the office to do lunch and learns. And, we extend that offer to everybody. We do a lot of traveling to do education. So one of these days I'll get organized and actually write the list so I can report it here on the show. But a lot going on.
Lunch and learn. I like that. I forgot that you guys offer that. Now, lunch is, of course, a steak at Gibson's, correct?
Not quite that high end, if we even provide
now
maybe it's just a learn.
Now I know why you're such a big fan of the McDonald's value meal.
It's a chips and
exactly.
learn.
Chips and learn, right.
Tortilla chips and learn, yes.
Chips, water, and learn. All right, and Andrew, what is coming up over in the land of acumen that you'd like to tease our listeners about?
Actually, we're just rolling out the product to institutions. There has been some demand on the risk side for having some risk managers live in our lovely 3D space. So they get to look at lots of problems at once. So that UBS problem spurred a couple inquiries into our 3D landscapes, which we're only more than happy to help people install and take a look at what's going on.
Yeah, that sort of 3D topographical look, I suppose you can call it, it would be kind of helpful in scenarios like that where you do have the rogue trader wreaking havoc. You can kind of look at that cityscape of volatility, as it were, and check out what's going on.
Yeah, you can look at 50,000 positions simultaneously and then kind of drill in and see what's going on. So it does give a little more flexibility to the standard risk dashboard that guys look at.
All right, and Rob, what is coming up over at OX? I know last show, Tim Navabi wasn't quite up on what's coming up at Options Express, so hopefully you've taken a look at the old calendar before coming on today.
Well, actually, our calendar is pretty clean right now. We're still transitioning into Schwab. I know that our educational department and certainly our compliance department have to look at a few things. So before we just book ourselves solid with webinars, so at this time we're kind of in a holding pattern. Other than this podcast and a couple of the newsletters we do here, pretty quiet on the education front, and I'm sure that's going to change soon. It's just it's a question of when, not if. So it's still, we're still in that transition period, and I've been through these mergers before, and it nothing happens overnight.
Of course, what else do you really need besides this show at this point? You're already reaching the ultimate audience. Anything else you're doing is just for your own enjoyment at that point.
Just second fiddle at that point.
Speaking of this program, we are doing more live shows by popular request. These ones are coming up at the Futures Industry Association Expo here in Chicago. I believe they're going to be October 11th and 12th. We will be recording in the expo hall itself. They built a nice little stage for us to do our thing. We'll be doing the option block as well as volatility views and the long and short of futures options from the stage there in the expo hall. So if you're going to come to expo, by all means swing on by and see us. If you're not registered for the show, don't worry, you don't have to come and do the full $1,000 ticket for the whole expo to see it. They do have an exhibits only pass, and that will get you in to see our shows as well. We'll be recording from 4 to 6 on was that Tuesday, and then I think 1:30 to 2:30 on Wednesday. So 2 different time periods. Swing on by Futures Industry Association Expo. If you want to check that out for yourself, just go to futuresindustry.org. Click on the conference tab, and you'll see all the information there, including how you can register for the show and come down and check us out. And that is going to do it for this episode of the Option Block. I want to thank all of you out there for downloading and streaming and subscribing to the show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.